Welcome back to the Dividend Diplomats YouTube channel. You've got your boy, Bert the Hurt, and you know you're rolling with Lanny. And we are the Dividend Diplomats here to talk to you about another undervalued dividend stock that we found during this past week of July 12th, baby.
Before we do though, smash that subscribe button. Give us the thumbs up. Guys, we are so close to 10,000 subscribers. Thank you everybody. Tip the cap to all of you people out there that have supported us over the last year. We are getting ready. We're getting amped up for our WWE themed video once we cross that 5-figure mark. So help us out, everybody.
If you smell what the Dividend Diplomats are cooking.
And you know what's cooking today,
What
Lanny?
is cooking, Bert?
This undervalued dividend stock.
Here we go, baby. The S&P 500 is still over 4,300 right now. Though it did drop by about 1% the past week between July 12th and July 16th, there are still undervalued dividend stock opportunities out there for you.
Exactly. That's why we are always on the hunt for these undervalued dividend stocks, because they are out there. It's evidence with our purchase videos, our watch list, everything we're doing. We are never going to stop working.
Showering, brushing your teeth, putting your shoes on.
Yeah, there's some undervalued dividend stocks in your shoes. You know, one sneaks in there when you put your foot in, you can't get it there. Yeah, exactly. Just do it.
Just do it.
Do it.
Do it.
But in all seriousness, we are amped up. We are ready to go. And I'm so excited that I may actually initiate a position in this company after we start talking about it. But maybe let's start telling you why, Lanny. You found this stock. I think you just do the honors.
About time you might start investing in this dividend stock.
Yeah.
Because I've owned this dividend stock for the better part of 2 years. And, you know, how do we find these undervalued dividend stocks, Bert?
Easy. The Dividend Diplomats, Dividend Stock Screener. 3 metrics. Let's rip them off, everybody. PE ratio less than the S&P 500, payout ratio less than 60%, and a history of increasing dividends. And don't forget, once we pass the first 3, there's that bonus yield. Time, isn't it, Lanny?
So when we find dividend stocks, we always look through the stock screener to see if they pass these 3 metrics. And we found a stock that not only passes the metrics, but almost rips them to shreds here. We're going to talk about an industry that you may not really go into. You probably heard of Dow Chemical. You probably heard of DuPont.
Yeah, the former Dow DuPont that merged
DuPont,
and then respun.
Dow.
Yeah.
The ticker symbols are all over the place with them. But have you heard of Lyondell Basel, ticker symbol LYB?
Before you invested in them, no. I learned about them from you, so I'm happy you said the company's name, because I still struggle for some reason to say Lyondell Basel. I had to practice it before this video several times, sadly.
Finkel is Einhorn, Einhorn is Finkel.
Yeah, I did actually see Ace Ventura on, and I watched it for a little bit the other day.
Oh, man.
Yeah.
Man, this guy.
Yeah, just, hey, good background while we're digging up these undervalued dividend stocks. So, Lanny, what jumped out about you about this company right out of the gate?
Well, right out of the gate is that they actually had a nice pullback in the stock price. You know, in the past, I'll say year to date, they're actually trailing the S&P 500. They're only up about 7.7% year to date. However, in the last 52 weeks, they're up actually over 40%. Now, don't let that scare you, because over the last week, they're actually down almost 5%. So that's kind of like why it's kind of caught my eye, because you don't really see many pullbacks of, more than 1 or 2%.
No, and we're going to show you here why our stock screener is going to make it so that you shouldn't be afraid of the fact that they are up so much over year to date, because that's why we are always still looking forward to make sure that they are trading at a discount compared to the market.
So though that they're up over 40%, their stock price is still only at $96.14. I say only because that first Dividend Diplomat stock screening metric, the price to earnings ratio. Analysts right now are expecting $15.79 in earnings per share.
Some real good earnings.
Yeah, some real good earnings.
Gives you a PE ratio of just over 6.
6 times forward earnings.
Yeah, you heard that correct. 6.
Essentially you can have their EPS. Guess what? They're still undervalued.
Yeah, and what's the market PE ratio? Over 45.
Yeah, over 45 times or 20 plus times earnings on the forward S&P 500.
Screaming undervaluation.
So 6 times forward earnings.
So let's move into the second metric, because let's make sure everything adds up here as we go through this. Their annual dividend is $4.52. Divide that by the $15.79 forward earnings. Man, this is a low payout ratio of 28.63%.
28.63%. below the perfect ratio, 40 to 60.
Plenty of room to keep growing the dividend.
Plenty of room to keep growing the dividend.
They must have a low yield, Lanny, right?
Even if they had half the EPS, your payout ratio is still perfect.
Fantastic point. Before we talk about the yield that I'm saying in theory should be low, let's talk about the dividend growth history here, Lanny.
That third metric.
Yeah, let's not jump to the fourth one before the third one. Their 5-year average dividend growth rate is 6.1%. Very solid. Still beats inflation.
And that includes a tough 2020 time period.
Yeah, that's a good point too. And they still have managed to increase their dividend. They've done it now for almost 10 years here.
Yeah, you really got to look back at the history to understand the growth. You know, I think some sites will say only 7 years, but you actually look at it, take out some special dividend type of matters, you'll realize it's probably closer to 10 years. And I say you really need to look back because during the pandemic of 2020, they actually did not announce a dividend increase, but they still count as a growth because the 2020 dividends paid of $1.05 per share per quarter beat 2019's total dividends paid to shareholders.
That sounds like an increase to me when you look at it that way. So everyone just keep an eye on that too. Sometimes when you're looking at these websites that automatically pull in the consecutive dividend increases, there may be more to the story.
So the dividend growth rate of 6.1% is also factoring in literally a zero for one time period because it'll do $1.05 in 19 to $1.05 in 20.
Yeah.
So that's built into that calculation.
That's a good point too. And didn't they just announce a dividend increase too, Lanny?
You bet your damn dollar they increased the dividend. They increased their dividend 7.6% just recently back at the end of May.
Yeah, so their quarterly dividend went from $1.05 to $1.13 in there. So it still beat that 5-year average dividend growth rate too. Fantastic stuff here for LYB. So with everything lining up here, the super low PE ratio, super low payout ratio, very solid dividend growth rate, nice history. Again, I'm thinking that everything signed would point to there being a low dividend yield.
Up 40% from last July to this July.
That's true. Even thinking about that, the dividend yield should be low,
right?
It just has to be. So what is this yield, Lanny?
You know, they're kind of taking a page from AbbVie's book.
That's a good comparison.
ABBV, if you haven't bought or looked at that pharmaceutical, but their dividend yield is actually 4.7%.
Yeah, so I mean, think about that, everybody. They have a 4.7% dividend yield. They just increase it 7.6% too. I mean, and they have a super low payout ratio. The dividend metrics,
salivating over here.
Yeah, the dividend metrics are looking fantastic.
I mean, in LyondellBasell, if you take a look at their financial statements, you know, we're waiting on the second quarter earnings release, but the first quarter they had $9.1 billion in sales, and that compared so favorably to quarter one of 20, which only had $7.5 billion.
Yeah, and there's some other great things too looking in there when you start looking at the balance sheet as well. We also like to look at the current ratio, which evaluates their ability to pay their short-term assets to cover their short-term liabilities.
Yeah, so liquidity. What's liquidity look like?
Yep, so typically a strong current ratio is over 1, meaning you're more liquid, you can pay your bills, you have the assets to cover it. Their current ratio is 1.74x there, so crushes it easily.
Wow, so very fluid, can acquire, buy companies, change up what they're doing because of how liquid that they are.
And we always look here too at the long-term debt because we've also noticed one of the trends when you start seeing companies that get into trouble, have to announce dividend cuts during good times, is they all have massive debt on their balance sheet. What we liked when we started looking at the balance sheet here for LYB is you can actually see that their long-term debt is being paid down. It decreased $1.5 billion in their last 10Q.
So to summarize, with LyondellBasell, again, ticker symbol LYB, why is this a dividend stock to buy right now? Why is this an undervalued dividend stock that should be on your radar? Well, in summary, they have a price to earnings ratio of 6 times. They have a dividend payout ratio of only 29%. They have plenty of room to juice up their dividend. And I'm going to pause here because even the forward earnings of $15.79, you can have that. Literally, just divide it by 2 to be even uber conservative, and their price to earnings ratio is 12.
And their payout ratio still crushes it.
Yeah, still below 60%, so in the perfect payout ratio range. So in a worst case scenario, it's still undervalued.
Yeah, and then talking through there with the history, they're building up that dividend growth history almost 10 years now. with that 6.1% 5-year average dividend growth rate, with that fact that they just announced that 7.6% dividend increase last quarter, and they have a very strong, juicy dividend yield of 4.7%.
Yeah, you've got to love this company. LyondellBasell, a great undervalued dividend stock. Do you currently own it? If you do, like the video. But Bert, what are your thoughts? Where do you stand with LyondellBasell?
And I think I teed this one up earlier. I mean, I think this is going to be one that's going to be screaming very high to our watch list now, and we may look to continue to add here, especially if the price goes. I mean, if the yield crosses 5%, I would be a fool not to buy it.
You know, I already own almost 75 shares of LyondellBasell. I've had it for, again, a better part of about 2 years. You know, shame on me for not buying more during the pandemic when it was getting crushed from a stock price standpoint.
I know, but you could say that about so many investments. I mean, you are still investing in other great undervalued dividend stocks too that weren't LYB.
True, but hey, that was the undervalued dividend stock pick here. Again, let us know what comments you have on them or what other undervalued dividend stocks are on your watch list.
And again, everybody, subscribe to our channel. Give us a thumbs up. Help us get to 10,000 subscribers. Lanny, you want to send us out here?
That was Bert the Hart, and this was Lanny from the Dividend Diplomats.
Over and out.